welcome to the deep dive. So you sent us this YouTube video, BBBY, Kill the FUD, Connect the Dots, Part 11, from Marantz.
Right.
And we're going to really get into it today. You're looking to understand the Bed Bath & Beyond situation better, what it all means for investors.
Yeah, definitely. There's a lot going on there, a lot of noise.
So our mission basically is to unpack this video, see what connections they're making, and try to separate, the analysis from maybe speculation.
It's a good approach. It's certainly a situation with strong opinions flying around.
Right.
Looking at the video's arguments structure-wise should help clarify things.
Absolutely. So right off the bat, the video points out the stock price drop. BBBY down around 40 cents. But it kind of questions if that's the full picture. Hints that maybe something else, something more deliberate is happening.
Yeah, the main argument, the core thesis in the video is that Bed Bath & Beyond isn't just failing.
Right.
The creator thinks it's actually being intentionally driven down, part of a bigger plan, a leveraged buyout strategy, especially in this distressed debt environment we're seeing.
Okay, so a leveraged buyout, LBO, in a distressed market. So for you listening, you might be thinking, well, why? Why do that?
Exactly.
And what about all the talk about potential buyers? GameStop, Carl Icahn, Newell. The video gets right into that, and that's where we should probably start.
Definitely. It addresses those rumored saviors pretty quickly. Starting with GameStop.
Okay.
The video creator is pretty adamant. GameStop is a buyer. Off the table.
Off the table. Why? What's the reasoning there?
It's specific. It points to Larry Cheng's previous stock buys and suggests that because of his alleged links to GameStop, Volution Capital, and Dragonfly, well, any move by GameStop to buy BBBY now would look like insider trading.
Interesting. So a legal hurdle, basically.
Exactly. And the video actually frames this as a good thing for GameStop. Keeps him from, taking on a struggling company.
So it dismisses that possibility pretty quickly. A scenario some investors might have hoped for. Gone.
Yeah, based on that specific legal argument.
Yeah.
And, frames it as dodging a bullet for GameStop.
Okay, next up, Carl Icahn. His name pops up a lot when companies are in trouble.
Always does, yeah.
But the video has quite a different perspective on what his involvement might mean for Bed Bath & Beyond.
It really does. It strongly warns against thinking Icahn showing up would be good for current BBBY shareholders.
Oh.
Yeah, he's painted more like a private equity type, similar to Apollo.
Right.
Focused on taking over, restructuring, making money later, but not necessarily in a way that helps the people holding the stock right now.
So the video is saying BBBY isn't like, say, the GameStop situation where individual investors could drive a turnaround. It lacks those fundamentals?
That seems to be the implication, yeah. That it's a different kind of play, one suited for private equity tactics, not a retail-driven revival.
Got it. And then there's Newell, another name mentioned. The video connects Newell directly to Apollo. That's the private equity firm we'll hear more about.
Yes, Apollo keeps coming up.
And the implication is, if Newell did buy BBBY, it'd basically be the same kind of private equity deal, same outcome for existing shareholders as if Econ got involved.
Pretty much. This is where that leverage buyout argument really starts to take shape in the video's narrative, linking these potential buyers back to private equity.
Okay, so let's really dive into this LBO idea then. Leveraged buyout in a distressed credit cycle.
Right.
The video says distressed companies become targets, right? Investors loan money, take over.
Exactly. They might put money in up front to gain control.
It uses the Hostess example. Apollo apparently put in a decent chunk initially,
but made huge returns later on. Yeah. That's the model.
So the argument is these investors are playing the long game, even if the company goes through, well, some rough times first.
That's a key part of it in distress situations. They have a longer time frame. They might expect, even plan for major changes, maybe even bankruptcy, if the end game is a much bigger profit.
And it's not just the big firms, right? The video also talks about executives. Why would they join a company that's struggling?
Good question. The video suggests there can be big financial upsides in buyouts, bankruptcies, not just for the execs, but for the consultants, the law firms involved too. It even calls chief restructuring officers, the CROs, the new guys, not the bad guys, implying they're brought in specifically for that process.
That's an interesting angle on executive turnover you sometimes see. It's not always about saving the company as it is now,
but maybe guiding it towards a restructuring or a buyout that benefits, well, certain parties. That's the video's perspective anyway.
Okay. Then the video points to the reverse stock splits, potential ones. 10 to 1, maybe even 20 to 1.
Mm-hmm.
It reads that as a really negative signal from the company itself. Like they don't see the value holding up.
Yeah.
And it probably comes before more dilution.
Yeah, that's a common take on reverse splits in these spots. It reduces the share count, boosts the price per share.
But doesn't change the company's actual market value.
Right. It can be a move to stay listed on an exchange or make future stock sales seem less dilutive per share. The video clearly sees it as bad news for current shareholders.
And speaking of dilution, the video argues pretty strongly against a stock squeeze happening.
Okay.
It says with ongoing dilution, more and more shares getting issued, it just gets harder and harder to push the price way up.
Makes sense. Supply and demand.
Yeah, it even guesses at potential post-conversion prices, maybe $1 to $3. At most $5 to $10 if it's super diluted, which, like it says, makes a big squeeze seem, well, unlikely.
The logic being a huge growing flow to shares makes it really tough for short sellers to get cornered. Just too many shares out there.
Then there's Hudson Bay Capital, their warrants.
Oh, yes.
The video claims if Hudson Bay converts those warrants to shares, they'd suddenly own a massive chunk of the company.
Mm-hmm. Warrants give them the right to buy shares at a set price later.
So if they exercise them, they get a ton of shares, potentially cheaply, increasing their stake.
Further diluting everyone else and giving them, as the video puts it, a lot of influence, potentially holding the company in their hands.
Okay, now this is where the video really starts, connecting the dots, as the title says. Focusing on Newell's board members and their links to Apollo Global Management.
Right. This is the foundation for arguing that Newell's interest is really an Apollo play.
Yeah, it goes through several board members one by one, looking at their histories, their connections to Apollo or Apollo-linked companies.
Let's break this down.
Okay, first, Gerardo Lopez, CEO of AMC Theaters when Apollo took it public.
That's a pretty direct link. Leading a company through a major deal with Apollo suggests familiarity, at least.
Then Bridget Ryan Berman, on the board of Tegra Global, which the video says is Apollo-owned.
Okay, another direct one.
Plus ties to Ashbury Automotive Group, where a former CFO also had connections. It starts to build.
Yeah, multiple links for one person definitely strengthens the video's case for potential Apollo influence at Newell. The Tegra one is quite clear.
Next, David Weltz. He's CEO of Icon Enterprises.
And the video links Icon style to Apollo's, remember?
Right. So Weltz's connections. CRV Energy, linked to a GSO fund, which the video claims gets money from Apollo.
Okay. A bit more indirect there, but noted.
He also worked at Visca's companies. And James Nelson and Courtney Mather worked there too. They're now on the Caesars board.
And Caesars keeps coming up as linked to Apollo.
Exactly. Weltz also worked for Alex Partners, a consulting firm often involved in private equity. And apparently some BBBY board members also have ties to Alex Partners. It's presented as this intricate web.
It really is. The video is painting a picture of a tight network. Apollo seems to be near the center. And Alex Partners popping up is interesting. Those firms often facilitate these kinds of deals.
Then Keith Casa, also from Icon Enterprises. He was CEO when Icon acquired Caesars.
Okay, another Caesars connection, reinforcing that Icon Apollo link in the video's view.
Yep, Robert A. Steele, connected to Berry Global Group, where Apollo apparently made good money.
Right.
And also linked to Evan Bay, the former senator, who's associated with both Apollo and Marathon Oil.
More threads connecting Newell board members back to Apollo through various past deals and affiliations. It's building a pattern.
Stephanie Stahl, senior advisor at Boston Consulting Group, BCG.
Okay, big consulting firm. They often work with private equity, though the video doesn't state a direct Apollo link here specifically.
Not explicitly for her in this context, no, but it adds to the picture of the financial world these people operate in.
Fair enough. Part of the ecosystem.
Ravi Salagram, connections to Ritchie Bros and IAA Automotive. And Apollo apparently has board representation there too, through someone named Sugo Vies.
Okay.
Salagram also worked at Intercontinental Hotels Group, which bought a London hotel from an Apollo fund.
Ah, so a concrete financial transaction linking a company he was with to Apollo.
Yeah. And finally, Courtney Mather. We heard his name before. CFO at Icon and Newell.
Right.
And he's also on the board of Caesars, that Apollo-linked company again.
Wow. Okay, Mather being in key roles across Icon, Newell, and Caesars, the video presents that as pretty strong evidence for this whole interconnected network with Apollo.
Definitely. The video also throws in a couple more things quickly, like Sabaris deals with Apollo and Albertsons.
Okay.
And Sabaris' connection to Avon. Why Avon? Because BBBY's former CFO and board chair, Harriet Edelman, worked there for a long time.
Ah, okay. connecting past leadership, too.
And it even mentions Avon and Apollo were apparently in the same building in New York for a while. Maybe a weaker link, but adds to the pile.
These kinds of connections, even if indirect, build the overall narrative the video is trying to establish. This network tied to Apollo.
And then Sugoviz again mentioned her prior role with Apollo at Fresh Market, and then she moved to Bed Bath & Beyond.
Right, that's a direct personnel move. People moving between these companies can indicate relationships or strategic alignment.
So to give more context on the LBO idea itself, the video plays an audio clip. Jason Modric.
Oh yeah, what does he say?
He explains that LBOs often target businesses that are fundamentally okay. Predictable cash flow maybe, but have bad balance sheets because of debt.
Right, makes sense. Asset-rich, cash-poor sometimes.
And he says there are ways to profit from both the good debt and the bad debt in those situations.
That insight definitely backs up the video's main argument. It explains why private equity might be interested in a company like BBBY, despite the obvious problems. They're looking at the underlying business, the assets, not just the stock price today.
So the video basically wraps all this up as a kind of I told you so in advance, a warning to investors.
Yeah, suggesting the outcomes they predict will prove their analysis right.
And it really pushes retail investors to do their homework. Research the leadership, the history, understand what you're actually buying. Contrast it with GameStop, where it feels investors had a different kind of understanding or goal.
That call for due diligence is always sound advice for any investor, really. Knowing who's involved and why can give you crucial context.
Finally, the video does admit Bed Bath & Beyond might have valuable brands. That's not disputed.
Right, the brand equity itself.
But it argues the company's finances, the balance sheet, have been deliberately weakened.
Which fits perfectly into the LBO thesis, right? A financially distressed company can be a cheaper, easier target for a takeover and restructuring.
Exactly. So pulling it all together from this deep dive into the video, the big takeaway is that BBBY's rough state isn't seen as just, bad luck or mismanagement.
Right. It's potentially viewed as a strategic situation leading towards a leveraged buyout. Maybe by Newell, which the video links heavily to Apollo.
And the implications for current shareholders, according to this analysis, aren't great.
No. The video strongly suggests significant returns are unlikely for them. Whether a buyout happens or not, the interests of the potential LBO players probably aren't aligned with the current equity holders.
This whole thing really underscores how important it is to look past the headlines, doesn't it?
Absolutely. To critically analyze the underlying strategies, the connections, the money flows when you're looking at investments.
The video definitely encourages listeners, do your own research, understand everyone's motivations.
Which leaves us with a pretty big question to think about, doesn't it?
Yeah.
Considering this incredibly complex web of connections the video lays out, what does it suggest about how private equity operates today, how it reshapes businesses, and maybe more importantly, what are the broader implications for individual investors trying to navigate this stuff, this complex financial world?
Yeah, that's definitely something to chew on.